Hello, everyone, and welcome to this special fireside chat on Beyond Institutional Self-Custody, why digital assets backup and recovery is critical. I'm joined here with Adam Healy, the CEO and co-founder of Station70. My name's Alex Wenham. I'm the co-founder of a company called Okuros. We do trading infrastructure in the crypto markets using cryptography to create private trading workflows. But Adam, rather than me talk about myself, can I get you to do an introduction to yourself and your company, please, as a starting point?
Yeah, absolutely. Happy to be here and glad that this all kind of came together. My name is Adam Healy. I'm the CEO and co-founder of Station70. We have a number of different security-related products, but our flagship product is a product called Bunker, where we focus on digital asset backup, private key backup and recovery, disaster recovery for the Web3 space. I've been in the crypto industry for going on about 8 years now, primarily in a chief security officer role at firms like Bakkt and BlockFi, and then started Station70 in 2023. And we've been kind of off to the races since then.
Nice. Okay, so maybe we can get started by maybe setting the scene for crypto technology, particularly in the custody space and how it's evolved. I hear stories that the beginning of crypto custody backup was literally seed phrases on paper within safes in large banks. And obviously a lot of things have changed since the dawn of blockchain and Bitcoin. So, this is the space that you're focused on. But I think before we get cracking on backups, it's probably important to think a little bit about the kind of custodial and self-custody landscape. I think particularly maybe in this first question, could you break down the kind of differences here between, what a custodial firm does in the traditional sense of the word and what is self-custody, but more importantly, what type of institutional customers are kind of filtered under each one of those definitions of custody?
Yeah, absolutely. So this is kind of a complex topic, but I'll be brief and I'll try to make it pretty simple. And to be frank, it kind of matters where you're at geographically within the world. There's a little bit of ambiguity, I think, kind of country to country, region to region. The easiest way, I think, to describe it is when we think about custody, what is custody? Let's ask ourselves that question. And at the end of the day, it is possession or control of the private key. That is the thing. That private key is the thing that allows you to affect a blockchain transaction for me to send 1 Bitcoin from my wallet to Alex's wallet, right? That's the underlying atomic unit of what we think about when we think about custody. Now, there's really kind of 2 modalities once we understand that. One is a custodial service, say Coinbase Custody is probably the most well-known globally, where they have sole control of that underlying blockchain private key. You, as the customer of Coinbase Custody, you interact with Coinbase through an API or a username and password, and you can move assets. But at the end of the day, Coinbase is actually signing that transaction and moving those assets from A to B. The other side of that same coin is what we kind of would think about as self-custody. Now, that has a lot of different forms. Probably the most popular is MPC-based self-custody that we see used prolifically across the industry. Thousands and thousands of firms use MPC-based self-custody. And what that ultimately means is you're using a third-party provider like Fireblocks or Fortify or Utila, and they are providing you a software service that allows you to do wallet operations, custodial operations, but them as firms are really just technology providers and don't have access to the underlying private key using zero-knowledge cryptography, multi-party computation. You as the customer of those services, you're your own self-custodian. You ultimately are responsible for the security of those keys, and pertinent to this discussion, you're responsible for the disaster recovery, the backup and recovery capabilities associated with those keys. So that's why you would come to a firm like Station70, where we have a suite of services that snap into any or all of those wallet providers, along with some others I didn't mention, and enable you with the suite of services to do backup and recovery of those private keys. And I think that's like really like the two differences, right? Custody versus self-custody. The keys, who has access and specifically who has sole control of those private keys is kind of how custody is generally seen. Now, which firms do what is really a matter of most cases regulation. Some firms that don't necessarily have a regulatory requirement to use a custodian, they still opt to use a custodian for whatever operational purposes of how their business runs, and others use a form of self-custody, generally through some type of MPC wallet. What I've seen is a lot of firms, especially trading shops, hedge funds, things along those lines, use both. They have maybe a bulk of their assets in a custodial firm, and then they have some type of a day-to-day operational amount of assets in a self-custody wallet that can match the speed of their business.
Okay, so you've got a fund who has a lot of holdings. They're going to have those holdings with a third-party custodian, but the funds they might have on account to trade when there's an opportunity would be in a self-custody account for ease of access to trade in that example. Is that kind of what you're getting at?
That is certainly one like operating model. Having been in the space for about 8 years, I have seen every flavor of this setup. Some firms do all self-custody, some firms do a mix, but certainly I think some of your larger, more sophisticated firms are using a model that you just described.
Gotcha. Maybe if we think a little bit more specifically to say the EU zone with MiCA coming in, or even like the way that the US think about custody. I know it's different sometimes by state, but the kind of general market participants that I would see as having to use a custodian would be someone who's managing third-party money, right? That segregation of duties from investor to holder of assets is kind of necessary from a legal perspective. So I guess what will be also interesting to understand from you is when it comes to managing keys, of course, if you're a market maker running your own capital, this is a very different kind of self-custody or custody question to, an asset manager managing third-party capital. How do you see the backup processes for keys between, say, the self-custody cohort and this kind of custody cohort? Are custodians doing the same things in a professional sense that, say, a market maker is doing in key management? From a backup perspective, I'd be keen to hear your view.
So, the same thing is like it's very much an absolute statement. So I would say that was part of the genesis of Station70, right? Having been a chief security officer in the industry for a number of years prior to starting Station70 and working at some firms that had, tens of millions of dollars or tens of billions of dollars in assets under custody, we looked around when I was a chief security officer and tried to find like basically what is the industry best practice around managing private keys for backup and recovery. And the reality is it's all over the map. And no one really had a good story to it. There were some firms that were trying to solve this problem using your example from earlier, putting USB keys in safety deposit boxes and trying to hold them as backup keys for firms. And it was, amateur hour at best, unaudited cryptography, people using laptops to generate keys. So that was really the genesis of starting Station70 was we know we can build a better product. So we should build that, take it to market, and presumably people will buy it from us. Now, how that actually operationalizes behind the scene, whether you're a trading firm using self-custody through an MPC wallet, or you're a custodian, from our perspective, that doesn't change how you do your backup. We have a suite of services. You can go in, you can articulate your recovery quorums, you can do things like attestation reports that prove that the cryptographic material used to access those backups, along with the integrity of those backups, are all still intact. And then you can provide that to your regulators, regardless of which country those regulators originate from. So we really wanted to build kind of a, really the only available today enterprise-grade disaster recovery, backup and recovery solution that exists for digital assets. How that's operationalized at a custodian or through our platform actually looks identical to how a trading firm that is doing self-custody operationalizes it through our platform. It's a very straightforward onboarding process, and it provides really industry best practices and enterprise-grade security regardless of your size of your firm. If you're two folks, two guys in a basement trading DeFi on top of Fortify, your capability suite that you would historically not been able to afford and not been able to build looks exactly like what we offer to some of our largest custodian customers or some of the largest banks that are our customers, and how they're doing disaster recovery using our products.
Well, yeah, I think since we're talking about Europe, and there was obviously MiCA as one of the kind of quintessential crypto regulations that's passed in the last few years. There's also other regulation specifically around disaster recovery and backups, I believe, called DORA. How have you seen this kind of permeate through your clients and your prospects? And I guess when I think about regulation, particularly from a European perspective, they tend to be world leaders in regulation, but this also tends to set the threshold in a multi-jurisdictional kind of business. Is this what you're seeing? And I'd be keen to see.
Yeah. Europe is definitely leaders in regulation. That definitely seems to be the reality across any industry, whether it's crypto or otherwise. Just because we're a U.S. company, we have clients that are global. We have clients in Asia, Latin America, Europe, Australia, pretty much everywhere that we can legally do business. We have a client somewhere. The product's been live for about a year and a half, and we have hundreds and hundreds and hundreds of clients at this point. Because again, from our perspective, we're really have the only enterprise grade solution that's available today. Now, specifically in Europe, just because we're a U.S. company doesn't mean we don't operate in Europe. We obviously do, like I just mentioned, and we have the European Council that has helped us tailor the product to DORA and provide a level of security, a level of controls, a level of integrity to the backups and the keys that are used to access those backups to our European clients. And we have a whole legal opinion around DORA and how how our solution allows our European clients to solve the problems that are articulated or the controls that are articulated within those regulations. Where we really like kind of having that piece of that legal opinion available to our clients, because it helps them also navigate what disaster recovery means in the Europe regulatory construct, without them then having to go and get another legal opinion and do all of these things. We kind of have this all buttoned up for them, and it's a really turnkey solution that they can use. And at the end of the day, some of the things that DORA requires actually has made our product better, because we've kind of taken some of those requirements and actually built them into the broader product. And it's not just our European clients that benefit from that; it's our global clients that benefit from those additional product enhancements.
Maybe one last question on this kind of regulatory topic, and then we can move on. I think some of the things that I've noticed in this market from being here for a while is the blending of terms, particularly how people would think about custody or self-custody with certain providers like maybe Fireblocks or others being kind of termed as custodians when to me they're more kind of infrastructure providers. But at the same time, if you're doing self-custody, using MPC, where there is a custodian that might be part of that verification process, these workflows do start to meet the kind of criteria of what an existing custodian would do in a traditional finance sense of the word. So, are you seeing these two areas start to blend? Is it still very much a gray area? So if you need a custodian, it has to be a regulated custodian, or is this self-custody practices starting to be accepted in some jurisdictions as, custodial practices in general?
Well, so Fireblocks is a good example. So Fireblocks has been well known for a number of years now, and they have thousands of clients as a MPC wallet provider and a infrastructure provider, to kind of use your word there. And they are by definition not a custodian. So anyone who is using Fireblocks and thinks they are using a third-party custodian, they are just factually wrong. Now, that being said, over the last year, Fireblocks has built Fireblocks Trust here in the United States, that they do now have a product that is a qualified custodian, using a legal term, that they have offered up to some of their clients to do custodial services. But that is the bulk of their clients, the vast majority of their clients, and 99+% of their clients that have been using Fireblocks for years are using their self-custody infrastructure service and are not getting custodial services from Fireblocks. And now, what does that mean? That means I like to use an example. I think AWS explains this in a very good way, right? AWS explains cloud security through the lens of AWS, Amazon will handle security of the cloud, making sure their services are secure, making sure the cloud platform is secure. But then you, as a user of AWS, you have to handle security in the cloud. So if you deploy an insecure app into AWS, that's not an AWS security failure. That's a security failure of the app that you deployed in the cloud. So I use that framing to kind of explain, well, what is the risk profile and what is the architecture, both from a business and technical perspective, of like an MPC wallet provider like Fireblocks in the example that you mentioned. Now, Fireblocks is providing secure MPC libraries, a secure SaaS product, secure infrastructure. But you, as the user of Fireblocks, as the customer of Fireblocks, you still are ultimately responsible in this self-custody model. You are still ultimately responsible for the safekeeping, the disaster recovery, the backup, all of the pieces around the private key material that is available to you, because Fireblocks operates in a zero knowledge structure, meaning they actually don't have access to your underlying private keys. You do through their software. Now, that means all of that security model, let's say using kind of the AWS analogy, the security of how you use Fireblocks is now fully within your responsibility as the customer of Fireblocks. So that means you have to be responsible for how your workspace admins are configured, how your tap policies are configured. Hopefully you haven't enabled something like raw signing unless you're incredibly technically competent and you have you're at a firm that has a team that can manage that. I wrote a blog post recently on raw signing, and there are some vendors in the space that require you to enable raw signing as part of onboarding to their products. And I would tell you to run very quickly and very far away from those vendors that ask you to do that. So, but at the end of the day, you as the Fireblocks customer are responsible for managing kind of security inside of Fireblocks, inside the tenant that you're operating within. And then that necessarily includes the backup and recovery of the private keys. So making sure that you are, one, aware that you actually need to request that backup from Fireblocks. Two, that you're working with a firm like Station70, where we have secure API integrations and you can request that, and then we can process that in something like Nitro enclaves and a secure environment that has been audited and tested and all the appropriate security controls in place, such that then you can use Station70's bunker product to safeguard and to have resiliency with those backups that we're storing on your behalf, also in a zero knowledge way from our perspective, on behalf of you through kind of this Fireblocks Station70 integration. So that's kind of how I would answer that question.
Yeah, look, makes sense. Of course, if you're a custodian and you're using Fireblocks, or a bank and you're using Fireblocks, that's different. But I guess if you're an investment manager and you're using Fireblocks, is the self-custody solutions getting to a stage where, they can be defined as, maybe custody solutions in the traditional sense? But look, let's move on.
Well, one thing I would add there too. One thing I would add there too is some banks, some firms, some custodians actually white label Fireblocks and then wrap a regulatory layer around it and then resell that service as a custodial offering. So again, there's gradients to how these solutions come together. But if you're just a trading shop, you onboard with Fireblocks, their MPC self-custody product, and you're off and running, you are in fact acting as your own custodian, and that presumably is being done within the bounds of whatever regulatory and legal requirements you have as a firm.
Great. So the boundaries are still very clear. It's good to hear. Maybe you could run us through how your product, maybe using Fireblocks as you have an integration with them, as an example, how it kind of works in practice, right? Because with these sorts of solutions, you can spin up lots of different wallets at any time. So it'd be interesting to understand as these wallets are being spinned up, how are you kind of thinking about the backup and storage of those keys? What's the latency between a spin up and a backup of a storage? That kind of thing would be interesting to understand from the workflow.
Yeah, so we definitely have the fastest product available today that does disaster recovery, backup and recovery of keys. So we have a very deep partnership with Fireblocks. We have since day one. They were our initial launch partner. We also work with a number of other wallet services, and the integration is essentially the same. We have a secure API integration that has a whole bunch of security wrapped around it that's regularly penetration tested, that's audited. All of our cryptography is audited by a third-party firm. We specifically use Trail of Bits. We think they have a very robust cryptography team there. And then the overall platform is also audited on a regular basis. So we have the secure API integration with Fireblocks that allows you, again, because if you're doing self-custody, you have stake in the game, right? You as the firm that is onboarded to Fireblocks and then presumably onboarding to Station70 for backup and recovery, you request a backup package to be pushed from Fireblocks to Station70. From there, you would then onboard to Station70's portal, and you would go through a very similar onboarding to what you did with Fireblocks. You would log in, you would generate security policies, you would generate a quorum that allows you to have certain numbers of folks from your firm that have to be required in order to execute what we would call a recovery in Station70. So you get those security policies set up. Usually takes about an hour to get everything kind of set up and onboarded, and then you're good, and you can go about your business, right? You can go back to trading or running your venture firm or whatever it is. And then we handle everything through that API integration. Once you've gone in and authorized it and configured those settings, we handle all of that in a zero knowledge way between our backend and Fireblocks' backend. The other piece, I would say, like the two other kind of components to our product that are worth mentioning here, and we've spent, long time building this product, and we really built it through the lens of a CISO, right? Like, what would I have wanted as chief security officer at BlockFi that the market simply didn't have, that we ended up building internally? What would I want, and what would pass our very high security bar? So the two other kind of core features of the product that I, at least, there's many other features, but the two that I think are most topical here are something that we call secure wallet transfer. So in the event that Fireblocks has, which, they want it, they're good friends of ours, but, you never know what happens in crypto. But in the event that there was some type of black swan event where there was a major systems outage or some type of data breach at the wallet service, you can then log into Station70 and quickly secure all of your assets away from that wallet service that either had a data breach or an operational systems failure or something along those lines, and then even re-import those backup keys to either a wallet service that is in a different geography using the same provider, or a different wallet provider. So we have this secure wallet transfer technology that was actually really, really hard to build from a cryptographic perspective, that we've seen used in production by some of our clients, and it works really well. And you're now talking about sub 5 minutes to go from major data breach, major outage at your primary wallet service to being fully back operational at either the same wallet service in a different region. Maybe they had an issue in the US, but not in their EU data center, or on a secondary wallet service, what we would call a standby wallet. The other kind of piece that I think is especially prudent to mention through the lens of Europe, but is available to all of our clients, is something that we call attestation reports. So once you're onboarded to Station70, once your backup is enrolled, using a term, our term, you can set it as the client to monthly, quarterly, or yearly check-ins. And what that means is we contact via automation your various quorum participants. We ask them to log into Station70. They tap a YubiKey. They sign some messages cryptographically, very straightforward, very seamless to them. And then we bundle up a report that is cryptographic proof that not only are the backups still there and all the hashes match and all the checksums match and everything hasn't changed, but then also all of the keys, both from our HSMs as well as the customer YubiKeys, are all also available. And then we produce basically a regulatory report that you then, as the customer, can use, whether it be with your regulator, your insurance underwriter, your internal audit team, whomever, to say, hey, we have this end-to-end report that cryptographically validates not only do we have backup, but all the things that we need to do a recovery are available to us. And we can do all of that without ever actually exposing the underlying private keys that have been ingested from Fireblocks on your behalf. So it's a very kind of compelling feature that some of our publicly traded clients use as part of their internal audit and their regulatory reporting.
This is one of the benefits of modern cryptography for sure. Um, could, let's move on. I know you have a partnership with Amazon Nitro. So, obviously there has been a few cloud outages. You talked a little bit from a MPC wallet provider, if there was a cloud outage, how you would do backup from a different geolocation. But, how does this kind of concept of, I don't know what happened with Iran, and there was some missiles obviously in UAE. There was some disruptions to Amazon servers there, but then there's also been kind of market-wide disruptions to some servers and cloud computing at some point. So how does your service kind of orientate itself around this sort of black swan risk, or even can you?
Yeah, you absolutely can, right? That's you mentioned the beauty of modern cryptography. That's the beauty of modern cloud computing platforms, right? Is if you thoughtfully architect your platform, you can have global resiliency without a lot of work, really, right? I mean, you have to have the right engineers in the right seats, or maybe I know it's 2026, so you have to have the right engineers using the right Claude code instance. I say that somewhat in jest. But you absolutely can build a modern cloud platform that is servicing clients that are globally distributed in a very, very resilient way, right? Multi-zone, multi-region architectures, automated failover, automated testing, resiliency around backups. There's certainly ways of doing that in a first-class way, and we've definitely have implemented that. Some of the initial engineers at Station 70 that helped us architect and implement this architecture, this high resiliency architecture for us, we're now on our third company together. Some of them worked with me at Bakkt, and then they came to BlockFi, and now we're at Station 70. And I would argue across the industry, we probably have some of the most deep understanding and some of the most deep experience in building on top of specifically Nitro enclaves within AWS, which is their trusted execution environment, similar to like Intel SGX. And others. But we probably have some of the most credible engineers at Station 70 that are probably some of the most familiar with Nitro, certainly within crypto and maybe even beyond crypto. And we've met with the Nitro team at AWS numerous times, and we have a deep relationship there. But the trusted execution environment is just one aspect of a much broader cloud architecture that allows firms to have kind of global resiliency. And then in the Iran example, we weren't impacted by that in the issues that the AWS data centers had there, because again, we thoughtfully architected this from day one to have global resiliency, assuming black swan events, right? At the end of the day, not only are we a security company, but we're a disaster recovery company. So when people come to us and need something immediately, it is likely the worst day of their year, if not their life. So we have to be up and we have to be ready to serve that. Right. Some of the others that kind of operate in the backup and recovery space that do a really poor job at it, they have, USB keys and safety deposit boxes in London. Well, that doesn't work, right? Like a bank holiday, something happens, you've got to wait till Tuesday. Do you want all of your keys stored in some random bank in London? There's a lot of limitations to that. So we took a very, very different approach and took kind of a Web3 approach and a modern architecture approach to solve these problems.
Nice. I think we pivot maybe I know we're getting close to time here. So if we pivot maybe for the last, question, I think when I first got started in crypto, there's a phrase, not your keys, not your crypto. I also heard a pretty interesting phrase about crypto exchanges. They're kind of like public bathrooms. You go there to do your thing and then you leave, right? Ideally with your assets. I think what is good about crypto exchanges, apart from liquidity and functionality, et cetera, is, of course, if you have an account, there's typically a record of you that's in a legal regulation, a jurisdiction, something happens to you, you get hit by a bus, whatever it might be, there's a legal recourse for someone to get your assets from a Coinbase or Kraken or whatever exchange you use, right? In the self-custody sense of the word, this is a huge challenge. I'm sure that anyone who's had to write their will, who has some crypto, had to go through. So, talk to me a little bit about your foundation product and how big is this problem, and how have you gone about trying to solve this self-custody challenge in the worst case scenario here?
Yeah, so our bunker product is very much geared towards institutions. And I say institutions, but we have some high net worth individuals that hold assets on different MPC wallets and family offices and things like that. But we did build a product called Foundation, which solves the exact same problem for retail users. So if you're using Ledger, MetaMask, Phantom, pick your wallet, doesn't really matter. We've actually taken the bunker architecture that we use for institutions and applied that to the retail problem, and then now have a retail app foundation that is ready and available. We haven't actually really taken it to market yet because we have we have a go-to-market roadmap and we have plans and we have sequencing of things that we like to do. But that is a product that we built and is ready for users. As we kind of get to that go-to-market motion.
Right. Nice. Well, I'd love to hear more about that when it's ready. I think we might be on time, so we might have you might have survived the what does the next 5 to 10 years look like, the crypto backup question. But I'm sure you had a good answer for that one. But since we're on time, look, Adam, it's been a pleasure to speak to you. I hope the audience has found this useful and insightful, as I know I have. But Adam, pleasure to meet you, and thanks for everyone for tuning in.
Likewise, thank you, Alex.